Hi everybody, this is Mary Petruzzi with Team Petruzzi, your certified senior real estate specialist. I am joined today by Bryant Gatz of Fairway Mortgage, your reverse mortgage specialist. So, we've all seen the reverse mortgage commercials, but do we really know what it is? Can you explain to everybody what a reverse mortgage does and the benefits of them?
Absolutely. It's a broad statement, but we'll start on this, so we'll break this down for you.
Okay.
Think of it this way, a forward mortgage, what we call a forward mortgage in our industry is you go buy a home and you make a mortgage payment, right?
Yep.
A reverse mortgage or a home equity conversion mortgage, a HECM, it simply means that you're going to pull equity out of the property in one way, shape, or form,
Okay.
and then you don't have to make a payment back to the bank, right? So you're actually taking equity and money is just sitting there until some other life event were to take place. You sold the home, you passed away, whatever it might be, and then things are squared up or even up at that point in time. Does that help?
Yes. So what are the types of reverse mortgages available?
Yes, and again, very good question. You can do a refinance,
Okay.
or you can do a purchase. Okay, so those are the two ways to handle those types of transaction. Obviously, on a purchase, you're going to need to come up with a rather large amount of money down. That is, there's a factor in a calculation that's done based on age, the amount of equity in the home, if you owe money, and we look at it that way, calculate it, and it tells you how much money you can actually utilize. If you do a refinance, it's a similar calculation. However, on the purchase side, it's a calculation that determines how much you need for down payment. The refinance side, it determines how much money you can actually pull off or out of that property itself. Does that make
Okay.
sense?
Yes, it does. So are there special criteria that the borrower needs to meet in order to be able to use the reverse mortgage?
There's a couple, right? You need to have equity first and foremost. If you're doing a refinance, you have to have equity in the home itself. Okay?
Yes.
You do have to be a minimum of 62 years of age.
Okay.
Okay, and ultimately you have to be able to provide some documentation to show us what residual income you would have. It's not the same as a forward mortgage where you have to qualify based on what you make. We've got to prove that you have enough money coming in to be able to pay the taxes and insurance and any of the other bills that you may have.
Okay. And does it have to be owner occupied?
It does have to be owner occupied. Doesn't mean you can't do multiple units, right?
Okay.
So if you have a single family, obviously it's one unit.
Right.
If you have a duplex, it's two. As long as you occupy one of those units as a primary residence, then you can buy that property or refinance or use that reverse mortgage if you'd like.
Great. So then you can live on one side and you can have rental income from the other side.
Correct.
And that could count towards your residual income?
It would.
Okay. What about their federal, do they taxes? If they have any kind of debt as far as taxes to the IRS?
As far as tax liens,
Yes.
you're supposed to be lien free.
Okay.
Or ultimately, you're not supposed to owe them any back taxes, right?
Okay.
So you're not supposed to be in default of any federal debt. Really, that's the biggest concern.
Okay. All right. Now, there's a scenario where if someone wanted to move out of the frigid, cold Indiana weather and retire into, let's say, Scottsdale, can they buy a home in Scottsdale and still be mortgage free?
They could.
Okay,
And
how does that work?
By the way, if they go to Scottsdale, if you need a pool boy, I'm for hire. I mean, I'll go. But all seriousness, you can basically sell your home here and then purchase a home there. Again, you need some money. That factor we talked about, that principal factor, that'll determine how much money you need to put down.
Okay.
Okay, and then you're allowed to do a reverse mortgage for the remaining balance. Again, it's a calculation. I couldn't even figure it out now without any documentation in front of me. But that is ultimately, you need a down payment, and then the remaining balance would be a reverse mortgage.
Okay. That's great to know.
That's all.
Anything else that the consumers should need to know about reverse mortgages?
Well, I think the biggest thing, and you're doing a great job bringing this to the forefront, most people don't realize that this option exists.
Yes.
Right? And when they figure it out, or a family member does, sometimes it's almost too late. So what we want to do, and thank you for involving me in this, is bring light to the reverse mortgage, right? Bring it out and share it with you. So if you have questions, give us a call. Hit up Mary. I'm here to help Mary and support her and go through this. But every situation is a little bit different.
Yes,
So
which
that's the
brings up something that I did want to ask you about. Aging in place. So if moving to Scottsdale is not going to be what's in their best interest, because your kids want you to be close to home to them so they can still look after you, but your home needs to be modified to keep everything on one level.
Sure.
And if that in turn were to increase the value of your home, does that also benefit the homeowner or the borrower?
It does. And so ultimately, if you start with a $300,000 home, you're able to take $50,000 out to do renovations or upgrades, and that increases the value of the home to, say, just hypothetically, $350,000. Then you'd be able to tap into that extra equity for sure.
Okay,
Absolutely.
right. Because so that not everyone ages at the same rate, and what they want to do in their retirement adventure isn't always the same. But nonetheless, the reverse mortgage gives a lot of opportunities for people to fulfill their retirement dreams, whatever it may be or wherever it may be.
Absolutely. And the one other factor I would throw in there is that if somebody does age by another year or 2 or 3 between the time that they started their reverse mortgage and the equity increased, right, then that may change the amount of money they can pull out as well. So not just not just equity increasing, right, the value of the home increasing, but also remember, the older you are, the more money you can tap into. So there may be a double benefit to that if you go down the road a little bit.
Yeah. That's a great point, because we certainly did see a lot of increase in home values over the last couple of years. I think they said the average is $55,000 per home in the United States.
That's crazy.
Yes,
It's great though.
yes, it's great.
Great.
So okay, well, Bryant, thanks again.
Pleasure. Thank you.
And if you have any questions, I will have Bryant's information at the end of the video. And if you need to talk to me, my name is Mary Petruzzi, and my number is 317-370-5509, or mary@teampetruzzi.com. Okay.
Nicely done. Like I've been doing it for years.